Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and one more day until Thanksgiving. I won't be here on Thanksgiving. Probably not on Friday as well. I'm probably going to take a long weekend. The markets will be open on Friday, but I think only a half day, so not a terrifically eventful. Not terrifically eventful. So probably will be. Probably won't. Probably tomorrow will be my last day this week, so it's kind of a holiday, and everyone's getting ready for turkey. I know I am, and so that's kind of the long and short. I hope that everybody else out there is looking at a nice holiday, but I'm a little bit early on that. The market today a little bit, a little bit down. Not really. Kind of giving back a lot of stuff. The Dow was up. But the Nasdaq, where I like to be, it was down somewhat. So just kind of want to get into the slides as they are. So if you want to go directly to this broadcast, if you're watching on TikTok, it's super easy to do. Just go up here to where it says Bitly DTF 428. That gives you the direct link to the show on YouTube with all the charts and everything, like that. So, without further ado, let's kind of get into kind of what I was doing today, and the market direction and everything. Basically, it looks as if Biden has tapped the strategic oil reserve, which is, oh boy, it's forced errors with this guy. He can't shoot straight. It's funny. Trump filled that up during last year at record low prices. So I guess maybe make a little bit of money on that. I think it's all going to China. I'm not sure where it's going, but you just really, he can't. The gas prices are going up. Inflation is getting stronger, and oil is up. So I mean, what can you do there? The S&P was the one. The Dow is what really moved today. It moved up very, very nicely. S&P as well. That's why the oil stocks are in that S&P. The NASDAQ was down a little bit, about 1.5%. Actually, quite a bit. When the NASDAQ was down. So definitely definitely moved out of some of the issues. Some of the issues that I was in, I moved out of. Just give you an idea of the small portfolio and kind of how that's looking. Basically, the stocks that I'm in the small portfolio are Ford. It's up 15%. We've held it about 27 days. Shoe Carnival, one of my favorites, up about 16%. Hold that about 3 weeks, 21 days. Rambus, of course, this is a chip maker, up 8% in 12 days. Apple is up 6%, it's about 7 days, and Tilly's, which is a retail company, up 6%. Now, I did buy NXP Semi today, but it went down. Ouch. So hopefully that won't be the case. We will be probably looking at better things there. I'm hoping that it will move around. Here's the chart of NXP, and it did pull back today. Kind of was up there, moving past that 225 level, very critical level, and then it pulled back, and it's down after hours too. So who knows? I might get stopped out of this one. I certainly hope not. It looked like a very nice buy, but it's down $3 today. So you can't always win on them. Always remember to set your stop losses very tight. I typically set mine between 7 and 5% below where I bought it, so I could be stopped out of this one very, very easily. Tomorrow. I did buy an oil today. It's Pioneer Natural Resources. This was in a pretty good position. It was up strongly today, up about 16%, $7.50. And after hours, it looks like it's going up. So we're going to see some. It looks like inflation. This is an inflation play. It looks like inflation is kicking in, and this is looking this in terms of the oils, the E&Ps. This is one of the better ones. I do believe this is still buyable. This is in a buyable range right now, so you might want to take a look at this one. Pioneer Natural Resources. PXD is the symbol on that one, and it's set up pretty well. I think that hopefully it's going to move. Hopefully it's going to move well. We will see. We will see. I was a seller today of AMD. It pulled back, and I kept pushing up my stop losses. Took a small profit here, not as much as I would have liked. That's definitely for sure, but did sell AMD today. It's up a little bit after hours, just kind of whipsawing all around. But I decided that, what I do is typically if the stock moves up like this, I'll push my stop loss up. But if it pulls back, then that forces me to take a profit. I also sold AMSL. This is a chip manufacturing, equipment manufacturing company. Really fell down here, very, very weak. And I'm glad I sold it because it looks like it's going lower. So it's one of those things, it just, it goes lower, you got to sell it. I mean, there's just no two ways about it. Here's everything that I'm currently in. Here's everything I'm currently in. Robert Half, of course, is down a little bit today. The Qs are down today. Ouch. Ford was down today. Tesla was down today, but it's still above 1100, so I'm glad about that. Shoe Carnival, it's down a little bit today, but this one has done very well for me. Rambus, of course, this is the chip stock. It's up today, thank goodness. I have one that's up at least. TTD is off a little bit, but not very, very, very much. Seems like it's getting some support right about 102, 103. I'm hoping that it'll start reversing higher. Nike down a little bit again. Tilly's down. This is the retail chain, of course, and Apple is up today, which is nice. Thank goodness it's bucking the trend. So Apple's looking good. NVIDIA, of course, we talked a little bit about that. It's at about 317. There's support really at about 320, and I do think that hopefully it's going higher. And KSS, this is Kohl's. This is the retail store. It's up a little bit, but down on price, up on volume. And then, of course, this is the oil company PXD, Pioneer Resources, that I bought today as well. So that kind of gives you the roundup of all of the shares. So without further ado, everyone, let's get into your questions. By the way, if you want to get access to the if you want to get access to the action trailer, it's super easy to do. www.Dallas Trading Floor. So, thank you for waiting. All right, let's look at interesting. Okay, thank you, Matt, for this one. TITN. I'm not familiar with that. So let me see if I can get that. Bring that up on the slides. Yesterday, unfortunately, I had some technical difficulties with MarketSmith. They've been adding some features to MarketSmith, and it has been kind of a rough transition. I mean, I lost the ability yesterday, and hopefully today they've got those things they basically sorted out. So hopefully we're gonna see only good things, only good things now. But this is, oops, let's go back here. Well, I have to get the right screen up here, don't I? All right, so there we go. So now here we go. Titan. Thank you very much for this, Matt. We're right in the buy zone with Titan. It looks pretty good. Let's take a look at the pattern. Let's take a look at the pattern action. We're basically up. This is really amazing. 9% from the pivot in 2 days. So here's the thing about this, Matt. Right now we are extended. Typically, when you buy a stock like this, you want to buy it within 5% of the buy point. And why am I such a stickler? Well, because the further it gets from that buy point, the more chance that it's going to pull back to that level. And I suspect that it may, this one may pull back. So right now, this is probably not a good place to buy it. It's a little extended. It's definitely a good place to watch it because, it had a 7% price change today. It's up almost 9% for the week, and the month is 34%. So this is definitely moving. This stock is definitely moving, and it has this great 100% checklist. And in addition, this is a wholesale building products company for retail, 20 out of 197. So we're definitely looking in the right neck of the woods here for a winner. So this is looking very good. Here's the thing: you could buy it at this level. It is extended, so I would be a little bit careful buying this, just because. Not because it's not a good stock. It is a good stock. It meets all the criteria, but currently, currently this stock is extended, and what that means, of course, is that it's likely, if you bought it at this level, at the 38.29 level, which is where it is after hours, it's probably going to pull back down, probably to a little bit to where the top of the buy zone is. So I think that there's going to be there may be a pullback here to about 27.50. That would be a good place to buy it. But right now the stock is extended. So the best thing to do on that is to watch list that, wait for the pullback, and then I think you're going to have a very, very nice buy here, because this is definitely this is definitely looking very, very good in terms of a stock. So for everyone out there, this is called Titan Machinery. Symbol on it, TITN. It's definitely in. It's definitely in the. It's definitely watch listable. It's got 100% checklist, which is excellent. My only concern about this one, and it's unfortunately this is not a minor concern, is that it's extended. So wait for this to pull back, maybe to the 37.50 range, and I think you might have a real winner on your hands. Looking very, very good. So that's a good stock, good to watch this. Wait for it to pull back, buy in the pullback. Let's look at first of all, let's look at another re-entry for Zim. We kind of had Zim pull back, and we had to jump out of it, just because we never want to take more than a 7% loss on anything. So the question is, can we find another good entry point for Zim? Well, this is the reversal line, and it's pulled right back down to the reversal line. So this is potentially actionable, and definitely the place to buy it was as it moved above this, above the reversal line here. So this is actionable. It is potentially a good reentry above about. Let's get the exact number. Really, we could reenter this above about 52 or so. We're above that now. So here's what I would do: is I would kind of wait to see if this settles and reverses. As it reverses higher, maybe it's going to reverse at the 21-day line, and that would be right at about 52. If it pulls back to about 52 and then reverses on the reversal, that might be a very good re-entry. So here's what I would do with the re-entry on this. I would, I would look to basically, wait for the, wait for the reversal. Oops. I would wait. Oops. I got the wrong one up there. There we go. I would wait for the reversal. On Zim to buy. So I would kind of wait until there is a reversal. If there is a reversal, then I think you could buy it. But it looks like it's sort of crouching here. That's kind of a crouch. That's what they call a crouch. And if it pulls back to the 21-day line, I think you might be able to buy it. So right now, I wouldn't buy it at 55. See if it pulls back to about 52, 50 or 53. If it does and reverses, that would be a good entry point. It's a very strong stock. It's got a 99 relative strength, and you can see I've been trading it. I'm currently out of the stock right now, but I do think that it is on. It's got this cup base, and it's moving towards a potential 62.20 buy point. So I do think that this is still in an upward trend. It's looking good. It's just the question is, what's the right re-entry on this one? Very good stock. good part of the market too. 84 out of 197. It has been slipping a little bit in terms of its rank, but it's a good stock, and it's working well. So let's take the next question. ENPH. Let's look at that. ENPH. Kind of get an idea. Enphase Energy. This one's in the solar space. It's funny. The solar is really coming back right now. It seems. Seems like we have some very good. We have some very good numbers on solar. Here's the problem with this stock. It is extended. This is about the extent of where you want to buy it. So it's extended right now, and that's a problem. Probably not the best. Probably not the best thing to be in right now. So basically, this stock is extended, and you really can't buy it. All you can do with this right now is to watch list it. So that's really what you're going to have to do. What do I mean by watch list? Well, many of like Yahoo Finance and a lot of these other sites have a watch list that you can put in there. And one of the great things about Yahoo Finance is this is free. I mean, now this charting software that I use, it's a pay service, but there are many good ones out there that you can keep very, very good watch lists. And I really recommend Yahoo Finance. They have a tremendous amount of information on that. So I would put this in there, and I would set an alert on this, basically to see if it comes back anywhere near, anywhere near the buy point. So let's kind of do the smell test on it. It's got an excellent. It's got an excellent checklist. It's 100% really like that. On the technicals, we're about 4.2% below the all-time high. It's up this week. No, it's up for the month. It's down for the week. So that's not what we want to see. But on the pattern recognition, this is really the key thing. We're up. We're very extended, 38% from the pivot in about a month. So we're very extended. So if you were to buy it here, this is probably not the best place to buy it, just because it is so far extended from the buy point. Now, it's not enough just to pick the right stock. It's the correct. You need to pick the correct stock and have a good entry on it. So that's kind of my thoughts on it. Okay, great question on MasterCard and Visa from Hans. Here's the thing about the payment stocks. They're just doing terrible. PayPal is also sort of in this category. Just not the place in the market you want to be. It's just really being punished. And I don't know exactly why that is the case, but it is. Right now, the payment stocks, the finance credit card payment area, 121 out of 197. So basically, I like to buy in the top 10% of all the stock market currently. So that would be basically number 1 through about number 20 or maybe 25. This is 121. So this is very, very low. So this is not only is it in the bottom half, but it is in the lower part. It is in the way part of the lower part of the bottom half. So this is not an area of the market that you want to be in, the credit card payment area. It just isn't good. MasterCard has the same problem. These are just not ones that you want to buy. Okay, I'm sorry, that's Morellis. What's MasterCard? MA, that's right, MA. Forget about that. MasterCard isn't doing too well either. It's pulling back. So that's not looking good. And PayPal, which is also in that group, that's not looking good either. You see, they all have this similar chart, this downward trending chart. So I think this is an area you want to avoid. This is a part of the market that right now I just think is not, it's just not a great part of the market. So right now, credit cards companies should be avoided. So that's kind of that's kind of the thing. I mean, right now these credit card companies just really should be avoided because their charts aren't good, and they're not being very kind to the people that are investing in them. So I would stay out of both of those. Oh, do you know any training sessions or training institutes for day trading? There are several out there. I've heard people had good results with, online trading academy. But here's the problem with day trading in general. I'm a swing trader. I'm not a day trader. And the reason why I'm not a day trader is because when you're day trading, you're trading against the algos. So I think that's really a tough place to be. I think it's better to be a swing trader and trade the can slim way because you have a whole lot higher chance of success over the long term. And this has been actually back tested. So there are some very good training courses out there. One of them, of course, is Online Trading Academy. It's quite expensive. I think it's several $1,000s. I'm going to try to be putting together some training that I believe is better than that and being less expensive. But I'm not out with it yet. I'm working on it. Because if you learn to trade the constant way, I think you'll be very pleased at that. Okay, we have another question that's kind of related to the credit card companies, and of course that is PayPal. And I kind of want to show you the chart for PayPal. It is just horrible, and all the credit card companies are doing poorly right now. I expect there's going to be a lot of defaults. This is kind of what happens when sort of the Novocaine of the cheap money is coming off. So I think we're going to get some pain in this area. So right now, if you're down more than 7% in if you're down more than 7% from where you bought, I think that you should definitely consider possibly selling it. Let me see if I can get this correctly up. There we go. So the 7% rule. If you are down more than 7%, sell. I mean, really, actually, less than that would be ideal. But really, the most important thing is that you need to sell if you're down more than 7%, because getting back to even is very difficult if you let it run more than 7%. So even if I'm in the right stock and I get in the wrong time, I will always sell using a stop loss at 7%, because I have found over time that is fair. That has done me very, very well. And of course, we all get situations where we're down over 7%, but try to hold your losses to 7% by using stop losses. It can be very good. What's my opinion on Upstart? And Upstart is an interesting company. It's they do credit scoring via AI, using social media and that kind of thing. Here's the problem with it: it is in a downward trend, and I just don't like to buy stocks when they're in the downward trend. Now, it is in a good area, the finance consumer loans area, but let's take a look at that area overall, because I definitely think if we're interested in the consumer loan area, which I don't know if you're interested in, you probably were interested just in Upstart alone and not necessarily the consumer loan industry. But if we're looking at the whole group, and this is how I tend to look at them, the group is better than Upstart. The number one stock currently in the area is a company called Regional Management. This is a company that I talked about a little bit yesterday. It was right in the buy zone. It's pulled back now a little bit. If you want to get exposure to this consumer loan area, and by the way, it's very good. It's the number 8 category in all of the 197 areas of the stock market. This one is the one you probably want. It's called Regional Management, and it is currently right below buy zone, but it's definitely actionable here. So let's kind of look at the checklist. 89%, that's very, very good. On the technicals, it is basically 4% below a consolidation pivot, and that is at 64.07. So we're right below the pivot. This is not a bad place to buy something like this. It has a 95 relative strength, which is quite strong. And we've gone through earnings very successfully. Looking at the fundamentals on Regional Management, as you can see, up 23% in sales last quarter, over 100% in profits. Now, when you're looking for a stock over a long period of time, I typically like to see 20% for 2 or 3 months. At three at the best, three or more would be great. Right now, regional management doesn't have that. Funds are moving into this right now. So I might take a half position in this one, but I wouldn't take a position in Upstart right now, just because the way it's handling itself. So that's kind of my take on it. If you want to get exposure to that consumer finance area, take a look at RM Regional Management. That's not a bad way to go. Okay. Let's see, thoughts on STEM, STEM. Take a look at that. STEM Incorporated provides commercial and electrical to optimize energy by switching. I have no idea what they're talking about, but it's a computer software company, and I do like that segment of the economy, the computer software specialty enterprise. But with all that said, and I definitely like their fundamentals. I definitely like their fundamentals. They're up in sales 270%, 75%, 342%, 334% last 3 quarters. It looks like they're only about 3 quarters old, so they're looking pretty good. Still not profitable though, so it is a growth company. 30% funds, that's looking good, but they do have a negative cash flow. And for something like this, I'm probably looking less like a growth stock and more like a utility. So I would say I would probably pass on this one. So that's sort of my that's sort of my take on on a stock like this would be to pass for now. That's kind of my take on it. I would pass for now on this one, just because I think that it's here's the thing about it. It's relatively speaking, it's really a utility stock. It is software. I agree. It's trading under the 200-day line, and at the 40 days under the 200-day line. Relative strength is 64. It's weak, and it is going. The S&P is going up faster than this stock, as you can see by this black line here. So here's what I would do on this one. I would pass for now on it. Maybe watch list it. I mean, that's a good thing to do, but pass for now on STEM, STEM. That's a symbol of it, STEM. All right, NVIDIA. And that's interesting. Definitely want to talk about NVIDIA because I'm a holder of NVIDIA. I really like NVIDIA. One of my favorite stocks. It's been giving me a little bit of heartache as of late, though. I'll tell you that because it's definitely come down and testing the 10-day line right now is sort of where it's at. But here's the thing: it moved up very, very quickly, and then it came down and it tested the 10-day line. So I do think it's made this test. It definitely came through there okay, and it's starting to move back up. And it looks like it's up a little bit after hours, 318. I think this is going to come to rest about 320. This is sort of where I see support right now for Tesla. I mean, for NVIDIA. There's a little bit of it came down a little bit here, but I do think the support is right about here at about 320. That's kind of where I'm seeing it. So I do think that probably tomorrow's going to be a light day because it's right before it's right before Thanksgiving. This week is really a tough week because it just really isn't. It's just such a light week because everybody's on vacation. So tough to draw very many conclusions from this week. Let's take a look at NIO, and of course this is a Chinese automobile company. Let's get the right symbol in there. And I believe this has this has a valuation right behind Ford of all things. That's amazing to me. But anyways, it looks like it has reversed above the reversal line barely, but it doesn't look like it has as much power up about 2 cents over, but 2 cents after hours. Here's some warning bells on NEO for me. Relative strength of 39. I'm really not liking that. I like the group that it's in, 3 out of 197, but I don't like the relative strength of this. I don't like the relative strength of this. Also, it has a weak checklist at 56. The pattern recognition on it, it's way pulled back. The last pivot it had 222 days ago, it's 27% below that. So capital has been flowing out of this issue at least for the last about 220 days. So right now, I think you gotta pass on it. I don't think it's a good. I don't think it's necessarily a very good stock right now. I just think that right now, I think on NEO you need to pass. There are other ones that may be better in the area. I'm personally in Ford. I happen to like it, and it's performing. It pulled back a little bit today, but it's performing better than the Chinese EV makers, and that's Ford. Again, I bought it right as it was coming out of this base, and then it's a relatively inexpensive stock. Ford is, it's a $20 stock, if you can believe that. Been around for about 120 years. But this stock probably is better, and I'll show you why. The checklist is slightly better. It's 67, and NEO is 57. It's basically closer to its pivot. It's basically up 23% from its pivot in 21 days. So this has seen a lot of nice movement here on this cup base that it had. It's moved very nicely up. Now it is starting to consolidate right here at about the 19 to 21 area, and so I think it's probably going to be consolidating in there, and hopefully before it moves higher. But this is one, if you want to get something in the automotive, which I think is a very good area, this is one you might consider. I'm also in Tesla, of course, but it's a little bit more expensive, obviously, than Ford is. All right, and we did have one other question about AMD, and this is one I was shaken out of today. I hate it because I really like this stock, but I have very strict rules, and when I'm shaken out, I'm shaken out. And as you can see, I sold my position at 149.24, and after hours, it's up to 149.79. So it came down, tested the 10-day line, and then boom, it moved back up. AMD is a bucking bronco. I probably shouldn't have bought it up here. By the way, this is the danger, and here I am. I should eat my own dog food because here's what I didn't do correctly. When it came out of this base, this buy here was made properly. The second die is made, but I bought it too high as it. Well, actually, I sold it up here, and then I bought it back after it came out of this. So I probably should have waited for a complete base. And this is something, that I get impatient too. Right now, unfortunately, with AMD is, AMD is extended right now. So it's just one of those things. I mean, it's painful because you really want to be in the stock. It looks good, but buying extended can be a real disaster. I've done it. I've given up so much money by buying extended. Right stock, wrong entry. That's sort of AMD for me. So that's kind of been my my MO. So don't buy this one extended. It really is not worth buying it extended. All right, let's look at Sofi. Thank you very much, Mike, for this one. I haven't really done much with. I haven't been trading Sofi. It's in that consumer finance loans area, which there's a lot of competition for Upstart, Sofi. There's a lot of other ones, and it is very competitive. And it doesn't look like it is holding the 200-day line, and this is not very good because you don't want to see your stocks fall below this line, this black line, this 200-day line, because it indicates weakness. Right now, 1779. Now, this could turn around and move right back up. I'm not trying to bag on it, but from what I'm seeing in terms of the checklist and everything, it's got a good checklist, 78%, but the pattern is not good. It's below 17 days ago. It's 18. It's been losing about 1% a day, 18% down in 17 days from the pivot. So on this one, unfortunately, Mike, I have to kind of say, it's just one of those things you've got to avoid on this. You got to avoid this. You got to pass on the stock really for now, because it's not in a good position to buy. It's necessarily a good stock, but it's in a relatively difficult position to buy it. Not a good time, I don't think, to buy Sofi. Anyways, let's take a look at BABA. Okay, these Chinese stocks can be troublesome because there's been a lot of intervention by the Chinese government. And I want to show you the stock, and this really, this is one that I've been making money. I've closed the spread, but I've made money on this one by taking a bear position on Alibaba. Now, if you look at Alibaba, currently it's at 134.49, and it's up a little bit today, but this stock is shortable. So what do we want to do? Well, I'm going to put it down in my list of stocks that I have potential short. I'm going to potentially short, and this is Alibaba, BABA. Let me put that down. BABA, potential short. And basically, the reason, here's what I like to do on stocks like this. I like to find stocks that have this kind of trend where it's down, it's below the 200-day line, it's come up and it's tested the 40-day line, and it's pulled back down. This one is definitely going lower. It has earnings per share that are down. Lots of people are selling. BABA is probably a good candidate for a bear put spread. It's 50% from its pivot almost a year ago. That was the last basing formation that it had. So this one right now is a potential short. And there's a lot of things that you can do, because remember, you can make money in the market even when it goes down, by doing things like shorting. And I'm not saying to short this one, but BABA is a potential short right now based on this chart. I mean, this just unfortunately is not a good chart, and it probably is going to go lower. It has a relative strength of 7. This is not good. It's also in the retail internet group, which is not doing that well, 99 out of 197. So for BABA, here's what I would say with BABA. I think that you've just got to be super careful, and it's just not a good, it's not a good stock. It is a potential short, though, and you can make money on this probably as a bear. I like to do the bear put spreads because that insulates me a little bit from some of the risk involved in just buying a naked put. I don't want to get put to. That's one of the things I don't want to happen. All right, let's look at Facebook. Of course, now it's called Meta Platforms. It did bounce off the 200-day line, and it looks like it's moving up, but it seems like it has gotten a little bit of headwinds at the 40-day line. It's still pretty good. Relative strength is 62. I wouldn't buy it here. I'd like to see 80 or better on that. But it's got an extremely good checklist at 89, so that's pretty good. The pattern recognition on this one, well, it is above the pivot, so it's 12% above the pivot. So that's looking pretty darn good. I mean, it's got this consolidation here, so we definitely are in a base pattern. It's moving higher. So this one is a potential buy, actually, based on what I'm seeing. Based on what I'm seeing, and if I were to draw the trend line, which I'm going to do here, it's definitely above that trend line. So this is a stock that you could potentially buy. So this is a potential buy, but I wouldn't necessarily buy it right now. But it is a potential buy right now. But I would wait on this one. But I would definitely watch this one. FB, or Meta as it's called now, is oh no, there we go. Yeah, there we go. FB is a potential buy. It looks like it may be reversing off the 200-day line. This is not a bad place to buy something like it. So I very much I like this one. I wouldn't go in all guns with this. Maybe a quarter position, maybe a half position, but I think that it is possibly buyable here based on my charts. I mean, based on the charts that I'm seeing. So that one potentially is good. So BABA is definitely, with BABA, that is going to be a, BABA is a potential short of the stock, but Facebook or Meta, that one is potentially a buy. It looks like it has moved. It is reversed and moved higher. Any ideas about fintech, Square, PayPal, Sofi, and also BABA? Any insight? Well, here's the thing, Mohammed. Thanks for the question. For some reason, the payment space has been taking it hard. Visa is down, MasterCard is down, SoFi is down, Upstart is down. Almost all these are down. So I think the market is trying to tell us something here, and for some reason it doesn't like this payment space. So I would probably be looking to avoid this. Now, with Alibaba, it also, in part of one of their biggest businesses is, of course, Baba Pay in China, but that is not looking good either. That's potentially shortable. Here's the thing: I don't think that the Chinese government is going to allow Alibaba to go out of business, but Alibaba is in a downward trend. So I don't like any of the ones that you've bought up here. They're just not looking really that great, unfortunately. They're just not looking that great. So out of all these, is there anyone good? Well, no, I don't think so. Here's the thing. Let's kind of look to see where in the market, where are we getting the love in the market? That's always the key. So here is the list of the top areas. Currently, the number one area in the market are retail department stores. And that's one of the reasons I hold KSS, which is Kohl's. The next one is electronic semiconductor fabless. Now, I did have to sell AMD because you didn't quite buy it right, but this is where NVIDIA is. This is where another one that I have in here, Rambus, is in here. This is also good. This is number 2 area. The number 3 area is automobile manufacturers. Currently, I have 2 automobile manufacturers, Tesla and Ford. I mean, 4 is coal. Now, I don't have anything in coal. There are only 6 companies in here, and they're all pretty thin in terms of the way they're traded. Another way I would like to get some exposure would be computer software security. But as you can see from everything that I've really put up there, Mohammed, basically, none of these are in fintech. None of these are in fintech, unfortunately. So we've got to get to the part of the market where the money is flowing. Fintech is not the place. Where it is flowing is department stores, semiconductors, E&P oil exploration. So that's kind of where it is flowing. Right, so let's look at LMB. I think this is like, yeah, LMB. Let's just take a look. Limbach Holdings. Don't know about much construction maintenance services. Kind of like ABMI, I guess. Not a good company, unfortunately. Not a good chart. Downward trend. Just not what we want. Under the 50-day line. Relative strength of a 9. That's not good. 99 is the best. 1 is the worst. Let's look at the technicals. It's down 3% for today. Down about 2% for the week. It's got a terrible checklist, 22. Just avoid this one. This is not a good stock. Unfortunately, Roman, this is not good. So here's what I would recommend with LMB. I would recommend avoiding it. Yeah, I would avoid this one right now. I would just pass on this stock. I don't think it's going to come to anything good. So pass on this stock. Limbach Holdings, not what you want to see. So I appreciate the question, but no, you don't want to buy the stock. It's not a good one. Let's take a look. Question from TikTok. Thank you for everybody coming in and giving me a question. Let's look at this one. SONM. Okay, SONM. I don't know what this one is. SONM. Okay, Sunnah Holdings. Okay, it's a penny stock. Not a big fan of penny stocks, by the way. I typically like to see a stock that's more than $10 in price per share. Part of the reason is because penny stocks are only bought by small investors. They typically are not bought by institutions. And institutions are what makes the stock go up and down. It is currently in a downward trend, so that is not good. Let's take a look at the checklist. It's a 22, and that's terrible. IPO base, yeah, no. This is just, it's funny. This started out, way up here, 120, 129, and it's $1.50. You know what? I think somebody made a lot of money at the expense of retail investors. So here's the thing, just not a good, not a good, run away now. This is the kind of stock you just don't want to be in at all. This is not a good stock. This is a textbook of a bad stock. This is a penny stock that is in downward trend. Not a good stock. Don't buy it. Save your money. Buy something decent. This is just not a good stock. So that's what I would do. I would be running away from this one very, very hard. All right. Is it a good time? Oh, hi, HYRE. Some of these ones I don't know about. I probably should give you some stocks that I think might give you some kind of a leg up. So let's look at this one. HYRE. All right, let's look at HYRE and see. Hire a Car offers a sharing platform. This is kind of like a sort of this is a terrible chart. Look at this. It's bad. See, the problem with these Me Too stocks, this is a Me Too stock. This is like an Uber, but they're too late to the party with not enough funding. Yeah, this is a bad deal. It's a $5 stock. People think that, it's the stock is cheaper. I can buy more of it, make more money. Well, it's usually not the way. You want to buy. It's better to buy fewer shares of a better stock than more shares of a worse stock. And this is not a good stock at all. It's just not. 38 checklist. Yeah, this is bad. Avoid this one. Avoid. Yeah, this is a runaway. Runaway now on this one. Not a good stock. I'm gonna have to jump along. Hi, can I call you right back? Yeah, I do. All right. Well, it looks as if I am almost at the end here of the questions. I'm going to be signing off for now. I got to take another call. And everybody, thank you very, very much for everything. And let's. I will be back tomorrow at 3:30. Everybody, happy trading, and I will see you back here at 3:30. So let me go ahead and click out. And everybody, I will be back at 3:30 tomorrow. Please like the show, and I will see you tomorrow at 3:30. Thanks for watching.